Good morning. Good morning, everybody. So our class is on FA financial accounting for the foundation level. Financial accounting for the foundation level. So based on our new pack that was just released, I can't just release the new pack, right? And I'm sure every one of you have gone through the contents inside the pack. So we're going to be picking on that topic today on our FA. And this topic is going to be talking about control accounts, and its reconciliation. So this is a topic that you'll have come across at some point, right? So I'm going to be sharing my screen real quick and move straight into the class. Then we are going to I'm going to use the pack for the explanation. Then we'll pick a past question, we'll solve that, and that will be the end of today's class. Okay. Yeah. If you have any other questions or want to ask anything that looks confusing, can just DM me for that. Okay. So let's go to sure you can all see this. Okay. Let's go into the topic. That's our chapter 9. So these are the new pack looks like. These are the new pack looks like. Okay, so sorry. Don't want this thing to be distracting. So the topic again is control accounts and control account reconciliations. Control account and control account reconciliations, right? So first of all, we'll start with what a control account is. Although now they didn't give the definition here, and for those that are in foundation, they will never ask you what is control account. But because people in ATS2 are also doing this topic, control account, some of you might need it, right? So control account is just a memorandum account, right? Um, into which they are transferred totals. Is a memorandum account into which they are transferred totals, right? And the transferred totals are the various amounts of the transaction that has been previously in the ledger, in the individual ledgers of your creditors and your debtors, or your receivables and your payables. Okay. I say it again, it's a memorandum account in which there is a transfer total of the various amount in the individual ledgers of your creditors or your debtors, or of your receivables and your payables. Okay. So now let me break it down more simpler. So you can also say control account is an account that accommodates all balances from your receivables and your payables control account. Now don't forget when you are doing your ledger, right? When you are posting your ledgers, when you have credit transactions, you have your sales day book, purchases day book, right? Returning word, journal, journal, all those ones. You also have it, right? So now when you are now you're now trying to, infuse all these things into your normal account, and you are trying to balance up, who your receivable, who your payable is. Now, is there a return inward? Is there a return outward? And you're trying to balance up all these things together, right? You already have a balance already of who your receivables are, and you still have all that things that are related to receivables. So then, what do you use to adjust for that? That's your control account. That's exactly what it is being used for. So that at the end of the day, you will get a balance in your control account, which will reveal the true amount of your receivables. Then the same thing goes for your payables. Okay. So it relates to receivables, those who are owing you, and your payables, those who you are owing. It's just as simple as that. And part of the uses that this is for is number one is to locate errors. Now, those ones I'm saying is not here, but for note taking sake, you can just jot them down. Okay. So Part of the uses is number one is to locate errors, to prevent fraud, right? Then to aid management control. Because when you prepare the account, you'll be able to know which amount belongs to which transactions, and you'll be able to net it from your receivable balance that you have in order to know the value of your receivable as at the time that you're preparing it. Okay. Then you can also use it for reconciliation purposes, right? You can use it to reconcile, because your own record, you know that you have to record that your control account record might be different from your general ledger record, right? So if there is a difference there, you have to reconcile it. So it can be used for reconciliation purposes also, right? Then it saves time. Saves time. Saves time. And let me give you one more. It's it acts as internal check on ledger clerks and ledger transaction. So it's like check and balances, because it is what is in your ledger that is coming into the control account. Okay. So moving on, we have two types of control accounts. Moving on, you have two types of control accounts. We have receivable. The first one is receivables control account. So receivables control account is also called sales ledger control account. Receivable control account is also called sales ledger control account. It's also called total debtors control account. So it's either you call it one out of the three, but the normal one that is being called is receivables control account. So it's that is a receivable control account or sales ledger control account or total debtors control account. Okay. So now what is it used for? So a receivable control account is used to it has as a check and balance to your receivable ledgers, to your individual receivable ledgers, the balances, and all other transactions that relate to your customers. Okay. Now, let me take it like this. The total from the let me just give us what is in this pack. The totals from the day books. That means that's your sales day book. Don't forget, sales day book is what you use to record your what your credit sales, right? And what we are talking about when you say control account, it is mainly on the credit aspect of transaction, right? Because receivables are those that are yet to pay you as credit, right? So those from the day books are posted to the control account in the general ledger. These are supported by separate record, which is a list of individual balances that comprise the total in general ledger, right? Then lastly, say control accounts and accounts which represent the total value of the number of the separate balances. These are all the things that I've explained when I was giving you the introduction, right? So how do you know? Now, the first thing you have to say is, how do I know a transaction that is going to my receivables control account? How do I know a transaction that is going to my receivables control account? The first thing you have to know is it relates to your customers. Okay, it relates directly to your customers. So that's one of the major ways you know that it is under receivables control account. Okay. They said it's an account for recording the value of transaction in total with the credit customers. Okay, like I've said. So the receivables control account will contain some or all of the totals to date for all of the following posting. Now, under receivable control account, this is the format. This is the format. So, and all these things I have seen here, it is that it was brought from the individual ledgers of the debtors of the receivables. Okay. So now when you check this format, the logic behind this format is that anything on the debit side of the receivables control account, anything that is on the debit side, this side, the debit side of the receivable control account, it will it will increase the debt. Yes, let me call it like that. It will increase the debt of the customers, right? And if you want me to say, okay, it will increase the debt because some people may not understand what I'm saying. It will increase the debt of the customer. Anything on this side, which is the credit side, right? So then anything on the credit side here, it will decrease debt. Anything here will decrease the debt. Now let us now analyze these things under this format and how this increase debt, how this decrease debt. Now this first one, the balance, this balance will be a balance from your trial balance because you have a balance before this year's transaction, right? So now this one will be given onto you. Okay. And next one is sales. This sales, now some of you may be asking that why will sales increase the debt? So it's not supposed to decrease debt. Please do not do mistake. This sales here is a credit sales. I think they did mistake. They're supposed to write credit in front so that people will not get confused. This sales is what is a credit sales. Okay. So credit sales means was more debt. Okay. So I want to check the look for okay. So we can continue. So the credit sales. The next one is dishonor check. Dishonor check are checks that are no longer acceptable by the bank, and they can have different reasons for that. That have past 6 months, inconsistency with amount of words and figure, inconsistent signature, check may be rough, different things. Right. So when a check is not paid, debt still remains. Then revenue adjustments when customer fails to take discounts when expected to do so. The customer is supposed to enjoy discounts allowed, but at the end of the day, he did not put it into consideration. So to still be here, right? Then this one is cash. The cash that is here is cash received from debtors or cash received from receivables. So the cash would what reduce the debt. Cash will reduce the debt. Let me see if I can add something here. Okay, I can't add. Let's continue. Cash reduce debt. Sales returns. What are sales returns? Sales returns are returns inward, right? You have sold and they are bringing it back. So it means the debt will reduce because if someone wants to pay you 50,000 and he has already returned a goods of 30,000 back to you, his debt is not 50,000 again. His debt is now what? 20,000. That's a decrease in debt, right? Bad debts, provision for bad debts, yes. Provision for bad debt is an expense to a what will I call it? For an organization. Reason being that bad debts are irrecoverable debts, right? So companies make provisions for them for those bad debts. So they'll just say, okay, there's companies always have what you call credit policies. So what credit policies means is that so I can want to sell a goods worth 100,000 and I'll not say okay out of this 100,000 it is not realistic that I'll collect all the 100,000, so let me just make a policy that I can only collect 90%. So I'll just say the 10% is like okay bad debt, right? So in my expenses I will record the bad debt as what as 10% because I see that's okay I might not collect. So in real sense, it's not now in our books we will not record it as a debt again because they have already made provisions for the bad debt. So it's going to reduce the debt also in its own way. Then you have contract settlements. Okay, let me just take this for this contract settlement. So revenue adjustments. That's you know that this one is revenue adjustment. This one is revenue adjust. This one is for customer that takes discount when not expected to do so. It's the opposite of this. This one is when it's expected to do so, but it did not do so. This one is not when it's not expected to do so, but it did so. Okay. Then this one is contract settlement. You know what contract settlement means from cash book, right? You debit one, you credit one. It means it must have another entry. So for a contract settlement or a set off, you can call it a set off under control accounts. So your first transaction will be on the credit side here. You write it here. Then your second transaction will be on the debit side of payable control account. We have not gotten there. That's why I've not talked about that one yet. So if the first contract is here, the second contract will now be on the debit side of your payables control account. Don't forget that. Then you have your credit note. But this credit note here is not just anyhow credit note. This one is credit note issued. Please, in fact, this format is not complete. I'll tell you other things that should be there. Now, this one is credit note issued. Credit note issued. So the opposite that should have been here is what? Debit note issued. Okay. So on your debit side, in case you are doing a question, debit note issued will be on your debit side. Credit note issued will be on your credit side. Okay. So that's another one. Then apart from that, any other things that you feel that will reduce a debt to be here, any other that you feel that will increase a debt to be here. What is another thing that is not here that should be able to reduce the debt of customers? That's discount allowed. Okay, discount allowed to contribute to that. And then etc other things, right? So we are done with the receivable control account ledger. So but that's not everything. Now the last thing on that receivable control account is how you account for the reconciliation. Now, when does the reconciliation occur? The reconciliation occurs, it occurs when there is inconsistency or there is discrepancy between the amount that you get in the control account at the end of the day and the amount in the ledger. Okay, so when the two did not balance, yeah, there should be it's just like bank consolidation statements when the bank statement is not reconciled with the cash book. Okay, so but this one is the figure in the control account is not the same as the one in the ledger. Okay, so there will be have to be a reconciliation. Sorry. Um. Okay, I've already explained all of that. Now, let me just tell you how that will be done. When you have this is a very good example of what relates to reconciliation. This is a very good example of what relates to reconciliation. Okay. So let's quickly this question is on control accounts, receivables control account and receivable control account reconciliation. So he said the balance of the receivables ledger control account in the general ledger. So this one is general ledger now. The general ledger of entity C is what 53,690. That's the balance in the ledger. Then the balance on the customer account in the receivables ledger. This one, don't forget, this first one is the balance in the control ledger control account. This is the one in the control account that they've prepared before. Okay, okay. To highlight it. The second one inside receivables ledger, it is two different things. Oh. Receivable ledger is different from receivable ledger control account. Receivable ledger is different from receivable ledger control account. Okay. Receivable ledger control account is the one I just showed you. The same thing as your total debt or control account or your sales ledger control account. Why receivable ledger gone? It is the one for debtors. That's what you carry to your current assets in your statement of financial position as receivables. Okay. It's the balance I carry to your current assets inside your statement of financial position. This is two different things. So the amount in our contract account is 53,690. The amount in our receivable ledger is what? 52,000. 52,000. That means there is what? There is discrepancy. It means there is inconsistency. So it means so what it means. So the difference here is 1,690. Okay. So the difference is 1,690. So good. Now they now said after they did an investigation, they discovered some of these things. I said an investigation is carried out into the difference between the total account balance in the receivable ledger and the balance in the receivable control account. So what you do is that you will prepare both receivable ledger control account and receivable ledger account again and readjust those differences. Now, how do you readjust those differences? What you do is that you first start from the balance you were giving and you now adjust that balance that you were giving. Okay. Now they said sales on credit 17 to customer A has not been recorded in the customer account in the receivables ledger, but has been included in the control account. What does it mean? It means that 17 have been added to receivables. It has not been added. Sorry, they said has not been recorded. That means 17 has not been added to the receivable ledger of that customer. Now, the receivable ledger is a personal account. It will have a name of a person, maybe Shade's account, that's the debtor, Tola's account, or something account. Okay. So in this question, they just give us as customer A. So inside that customer A ledger, someone that bought goods on credit, they've not added 17. But the 17 have been added to the control account. I already show you what control account. I've shown you where the credit sales will be in control account, and it's the credit side of the control account. It has been there, but it has not been the receivable ledger. So what do you do? What you now do is that you add this 17 to your receivable ledger only. So this is exactly what you want to do. Now see, this is your receivable ledger. This one is a straight line method. Sorry, this is a vertical format. Sorry, I did mistake. I was talking about the precision. This is a vertical format. You could have done it in T format. If you want to do T format, this is example of a T format. But they did their receivable in vertical format. But if you choose to also do it in T format. So if you do it in T format, your balance, this your first balance as 52,000 will be on the debit side. Then these sales that you added to it will also be on the debit side. Okay, that's if you want to use your T format. Then the next one will be 2. You've done A like that. Next one is 2. And what does the 2 says? So the 2 says customer B has supplied goods. Customer B has supplied goods to entity Z to the value of 400, and this has not been paid for by entity Z. So that is also what for this, right? But and now customer B is selling goods to us. We have not paid customer B. That means we are the one owing customer B, Abi, of 400 naira. Then I said it has been agreed that this amount should be offset against the money owed to entity Z by customer B. No entry has yet been made for this contract adjustment in the general ledger or receivable the receivable and the payable ledger. So what does it mean? It means that customer B, we bought something from customer B for 400 naira and we not paid customer B. Now they are not saying that customer B also owe us, just like we owe customer B. And I say, okay, since we both owe ourselves, let us do contra. You know, I already explained the concept of contra for you, or set off, right? So, so now let us just do contra, or let us just do set off. You understand? Let us just set it off against each other. So how you set it off against each other? One will be on the credit side of the receivable control account. The second will be in the debit side of the payable control account. Okay. So, but now they said they've not recorded it in any of the two, either the general ledger or the receivable control account. So what do you now do? The first thing is you will add it to the one that they say they've not added it to, which is your receivable control account. So in your receivable control account, you have what? 400 on your credit side. Why you have 400 on your credit side? Because it's going to reduce the debt. Don't forget, they are owing us, we are owing them. Our debt has both negated each other. So they don't have debt with us, just as we don't have debt with them also. Okay. So that's the 400. But it's not only here the 400 will come to. The 400 will also come here to your receivable ledger. Why? Because they said it has not been recorded in any of the two. No entry has been entered, have yet been made for this contra adjustment, both in the general ledger and the receivables control account. So it is both that will affect both this and this. So in this place, when something is on the credit side, it means you are minusing it from here. So this one too is in form of what? Minus negation, right? Then the third one says sales return of 550 by customer C has have been recorded in C individual account in the receivable ledger, but the transaction have not been posted in the general ledger. So what does it mean? It means that this sales return is returning what? It will affect control accounts. So it will be under the credit side of the, this is it, credit side, sales returns of the control, receivable control account. The next one, customer D took advantage of an early settlement discount, having 240 naira. Entity Z had not expected customer D to take the discount. You see, this one is very tricky. I said customer D took advantage. You know, I was explaining this in the format. Customer D took advantage of an early settlement discount, having 240 naira. Entity Z had not expected customer D to take the discount. This has been recorded in these individual accounts in the receivable ledger. But what they say, but they not said, but the transaction was not posted in the general ledger. So it has already been in the receivable ledger. I mean, it has been in this second one already, receivable ledger. But now it is not yet in the control account. So the 240 will come here to be on this side. Don't forget, when I was explaining, I've already told you this is it in the format. This is, let's go back to the format. All these things are what I've explained already. See, this is it. Customer take a discount when it is not expected to do so on the credit side. So in our question, we also go back and put it on where? On the credit side as 240. Then the last one says sales return of 800 by customer E have not been recorded in the customer's account in the receivables ledger, but have been included in the control account balance. That means it's already here in the control account balance, but this 800 is not yet in the receivable ledger. So sales return will do what? It will reduce debt. So it is going to be minus here also. So when you now add all, when you add this plus this minus this, the answer that you get must automatically give you the remaining balance here. The answer that you get after you do all of these adjustments outside for the receivable ledger, you've already added, you've brought the balance that they give us. You've added the credit sales, you've minus the contra entry and the sales return. So this 52,500 must be the same thing as the balance that is here. What do I mean? How do you get balance that is here? That this one is 53,690. Then when you add 1, 2, 3, when you add 1, 2, 3, it will give you, let me quickly do it. It will give you um it will give you 1,190. When you add 400 plus 550 plus 240, it will give you 1,190. Then minus that 53,690, it will give you 52,500. So automatically, what you get as your balance carry down must also be same thing as what you get in your receivable ledger, so that you know that yes, that's balance. Then that's how you do your reconciliation. Then you are done with the reconciliation. Okay. So moving on, we have done that, we've gotten that. There's no issue with that. If you have question, you can DM me. Next one is our payable ledger control account. What is payable ledger control account? So it's just for those that we are owing, like our credits or our payables, right? And the balances also comes from your purchases ledger, purchases day book, purchases day book. Okay. So this is the format of purchases of payable ledger control account. Payable ledger control account can also be called purchases ledger control account or total creditors control account. Anyone that you want to call it, okay? So now this one is the direct opposite of your receivables control account. So you know that in your receivables control account, I told you that anything that will increase your debt to be here, anything that will decrease your debt to be here. So this one is the opposite. So for a payable ledger control account now, anything that will increase your debt to be here for payable meal. for payable, anything that will increase your debt will be on the credit side. Anything that will decrease your debt will be on the debit side. Okay. Anything that will increase your debt will be on the credit side. Anything that will decrease your debt will be on the debit side. Okay. So you have your balances just like the former one, and you have your credit purchases. Then this one will be your cash. All this one is what have reduced your the debt you are going to pay to your suppliers. So how will you know the transaction that will come to your payable control account? So it relates to either your supplier or your payables. Okay. So then the cash here is cash paid to suppliers. Discount received, yes, to reduce. Purchases returns is returns out. You bought something and you turn it back to a supplier down to reduce. And contra entry. This is the second leg of that contra entry that you saw in the receivables control account. Know that I told you that in receivables control account, the first contra was set off will be on the credit side. Then this is the second leg. The second will be on the debit side of payables control account. Okay. Then that things that you can see in this your payables control account is what is it called? Debit note issued and debit note received. So in this place will be our debit note received. This place will be for our debit note received. This place will be for our credit note received. So this place will be for our credit note received. Debit side will be for our credit note received. Credit side will be for our debit note received. Then on our credit side, so other things you can have is on our credit side, other things you can have is cash refunds. Cash refund. Then those are the major ones. For this side, okay, we've already mentioned this currency. Um, that's the major ones. Then any other thing that can reduce debt to be here. Okay. Then just like we have receivables control account reconciliation, the same thing goes for payables. We also have reconciliation. What can cause the reconciliation when there is discrepancies or inconsistency with the ledger, receivables ledger and the receivables ledger control account when there is difference. So you have this is a good example of let's just quickly do this. So after this, we'll take a past question. Then we are done with today's class. Okay. Um, the question says the balance of the payables control account was 171,860 as at December 31st. Balances extracted from the payables ledger on this date totaled 162,380. 160,380. Okay. So they've already given us balances for both. The first balance is what is for the control account, the second balance is for the ledger account. So if you check the difference, and there's a way that you even know whether you are correct or you are not correct, but I can't teach you that on our system. Probably when we do something like this in class, I'll be able to show you some tricks. Okay. So the difference is like 9,480. Okay. So now what does each transaction do? The first one says the purchases day book was undercasted. So purchases day book, where would it directly affect? It will affect the payable ledger control account because whatever is coming to the payable ledger control account is from those individual ledger balances and from your purchases day book. So because it was undercasted, what we do, we add the amount at which they undercast it, the amount. Undercasting means you have under recorded a figure. So how do you correct it? You add that figure back to get the addition and the correct figure. So you are adding the 60,000 back here. Then cash account total of 108,580 was put to control account as this. That's error abi. So what you do is that you look for the differences between the error of 108. So you say 108,580 minus 90,580. It will give you 18,000. 18,000 will come here under payable control because they said was posted in control account. So the mistake is in the control account. So you post it back to the control account. but it is reducing your debt because that's cash payment. Okay. And the third one is credit balance of 13,860 on the suppliers ledger has been set off. This one you don't even need to read it. Set off that set off. But they said, but no entry has been made in the control account. So you know that to be here. And last one said the credit balance of 37,620 have been omitted from the list of balances. So this one will not be here. So the credit balance will be in your what? Your receivable ledgers as this. So that will add to your receivables. Okay. So if you add all these your receivables ledger, you get 1 million. If you add this one plus this one, you get 1,31,860. Then plus minus this later give you 1 million. So the 1 million here must be correct as 1 year to know that your reconciliation is what is correct and is complete. This that's the last thing on. Then this one is just based on suppliers statement, which is just once in a while that they used to ask in exam. And this one does not have much because we have come to the end of the class. Let me just review on the supplier statement. So according to what is here, it is common business practice for suppliers to send monthly returns to their regular customer. So when the your supplier statement, when it is not aligning with your own statement, you are also have reconciliation. Okay. But before we go to their own reconciliation, they said see the transaction that have been recorded between supplier and the customer going for the call. Um, I've been having call sales, payment and settlement discount given. So statement ends with balance showing the amount according to supplier's account record. The customers currently owe, that's the supplier, that's your supplier statement. Okay. Mm, so that's basically all. That's basically all. So it's the same way you prepare your adjustment, the same way you prepare your adjustment for your what's it called? For your payable control account and disable control account, the same way you also do this. It's not anything much. It's not anything more. Okay, look at this one now. They said the manager received a statement of accounts of supply showing a balance to be paid 5,900. That so 5,900 is what is in the supplier statement. Then the manager's payable ledger for Akachi shows balance into Akachi of 3,360. This one is the one in ledger account. Okay. Now say investigation shows us the following. Cash paid to Akachi once has not yet been allowed by Akachi. So that means out of this balance, there is they've paid money to that Akachi. Okay. Akachi is the supplier. Akachi is the supplier, is the one having the supplier statement, sending the supplier. Now, the asset they have already paid 1,600 to that Akachi and has not been allowed. Cash payment to Akachi, 1,600 has not been allowed for by Akachi. Then what is allowed for means that has not been recorded by Akachi. So you first minus the 1,650 because we sent it not concern us. Just returns to Akachi is 780. Have not been allowed by Akachi. Just returns is return that means you return some goods back to Akachi. So it also was reduced debt. Then now say Emmanuel central account for Akachi has not been adjusted for 110 of discounts. Price discount allowed by Akachi. That means Akachi gave him some discount. So he's supposed to put amount also here. The 110 is coming here. So when you add the 110 to this, so this will now be the total figure. So the two must have the same figure to be correct. So we are done with that. The next time you see a question on okay, the next topic is just I think bank constitution or something. Yeah, bank constitution. But let's just take yeah, an exam question and solve that. So the question we are going to the exam question we are going to solve in today's class is oh, sorry, um let me check. There's a question I checked before the class. Yes, May 2021. May 21. Please, if you don't have this, that there's a way you can download from ICAN portal. So it's that you download it from the ICAN portal, or if you cannot download it, but it's very easy to download. You can DM me because I have some of the past questions, soft copy on my phone. I'll send it to you. Okay. So the question is long. So we have to calm down, take our time, and read it. So the question says Wakanda is an African focused company in the sale of super tech wristwatches with corporate logos. The wristwatches are purchased and sold in bulk on credit. The accountant is currently carrying out the consolidation of payables and receivables ledger control accounts, which are 218,320,218,020,000 and 172,120,000, respectively, to the total of the balances on the ledgers, individual accounts of the payables and receivables ledgers, which are 197,660,000 naira and 156,134,000 naira, respectively, for the month of March 2019. So that means for receivables, this is what is in the control account, this is what is in ledger account. For payables, this was in the control account, this was in the ledger account. So let's continue. The following has been detached. Cash received of 1 million 70 has been debited to individual customer accounts in the accounts receivable ledger. So let us start. Let me try to share my screen, introduce my what's it called, my Excel, so that I'll be solving it as I'm doing the as I'm reading each transaction. Okay, let me reduce this a little bit. I hope it's not too small. Okay, so it says cash received of 1 million. So what I will be paying, number one is we are paying the trade receivable control account and the reconciliation of the trade receivables control account. So we'll start from the first one. So the first one says 1,070,000 has been debited. Hello? I hope you guys just follow the question under the light. Okay. Now if you check now, that 1,070,000 is not a credit transaction, Abby. It's not a credit transaction. So they said cash received and debited to individual. So that one is not part of it. That one is not there. Please, I hope you are getting it. It is not there because I'm repeating it again. That's already a cash transaction. Okay. So moving on, we have total of discount received for the month amounting to 71. It has not been recorded in the control account, but has been recorded in the ledger account. So let us start from here. So we have our, let me just draw a table. think I don't need to do that. Okay. So I want to draw a table. I don't know how long it will be. Well, let's say it is this long. So after that, then our Naira sign. Let's try to use Naira in millions because of space. Let's use Naira in million because of space. Okay. So I have Naira in millions. Okay. So the next thing you do now, let's go back to our home. Next thing we'll do now, so sorry, is our trade receivable account, right? That's what we're playing. Oh, sorry. This can't receive right? This can't receive this for trade payable control account. Sorry. Okay. So what will our first transaction be? So that is not the covering it. So the first transaction is that the discount received. I'll be the one to write discount received as how much? One oh so, no 17,150. Right. Next one is what? On listing out, a supplier credits balance of 2 million. In fact, what's the balance? Sef? Supposed to bring the balance. Balance both forward is what? Let's come here. Our ledger control. That's 172. Let's see. What did they give us there in this question? They said carrying out a consideration on the payables and receivable. So okay, payable is 218, 320. It is respectively. Payable is 218. Payable is 172. So that's 218. 218, 320. Okay. So the next is at listing out, at listing out the supplier's credit balance of 2,050,000 thousand has been incorrectly treated as debit. It has been incorrectly treated as what? As debit. So so what it means is that the ledger, the balance of that ledger control account. Balance of that ledger control account has been um debited instead of it to be credited. It was supposed to be credited, but now it's debited. So that one affects what? It affects the ledger account gangan itself, because they said the supplier's credit balance, right? So you do um the receivables ledger. So you do receivables ledger. So we'll bring this sign again. Sorry. So the next one, okay, so now what is the balance they give us in the question for the ledger for oh sorry, babe, that's a mistake again. I'm sorry. So what's the balance? You start from the balance. You always start from the balance. Balance brought forward is how much? Let's come back to this question. That's 197,660. This is it. Respectively to the total of the balances in the individual accounts, the payables and receivable ledger 197,660. I feel this thing's too far. Let me just 196. I'm sorry, 197,660. Okay. So moving on, we want to correct this. Now I'll give you the logic to correct it. Um, correction. All right. Is there any English? Correction of um of long debit entry, right? I'll still have to move this thing back to where I got it from. Well, nothing I can do is so much. Okay. Let me take it back to where I brought it from. So this one will give us um now this is how you calculate it. You say two 2,050,000 times 2. Now I'll explain the reason why we're doing it like that. I'll explain the reason why we're doing it like that. This is how you do the calculation. Now let me explain like this. Is a long. I would take my time to explain that, even though I don't really have much time, but I'll just take my time to explain why I'm doing it like this. Let me just use this place as so. Now look at this. Let's say this was your. Let's say this was your. What's it called? Was your account for the supplier. Let's say this was the supplier's account. Okay, let's assume that this was the supplier's account. We want to assume that this was the supplier's account. Supplier's account. Now, this supplier's account, okay, they now said something about it. They said that a credit balance has been correctly debited. That means there is a figure here as 2050. That's the wrong posting. They now ask you that you should do the correct posting. How will you do the correct posting? If you want to do the correct posting, because it's supposed to be on the credit side, now it is going to be on the debit side. If you want to do the posting, you cannot just say it is 2050. If you do this, what it means is that your balance will become zero, and that's not what we are looking for. We are not looking for a zero balance. We are looking for a balance of 2,250 on the credit side. But if you put only 2,250, it will not be correct. So what will you do? What you do is that you put 2,250 and under 2,250. That means you use 2,250 in two places. So what it means is that this 2,250, one will negate. Let me do it like this so that you'll be able to get what I'm saying. One will be negated. So I'm coming on. So one will negate 125 will negate another 25, because anything on the debit side and on the credit side will affect each other. How is this thing doing? You understand my point? So it means this one will be cancelled out. This one will be cancelled out. There will now be 125 left. This is it again. Let me say it again like this. Let me say it again like this. This is 2050. This is also what? 2050. So now, how do you now negate the one in this side? It's by adding another one. So this debit side and credit side means that is the opposite of each other. So it's negating each other. You understand? So if two 2050 is here and you want to remove it from here, what you do is you put another here, which means it has negated that one. Then the one that you're now going to bring, that you want to be credited, that you want it to be credited, go according to the normal posting. Now bring it. So that means you have 2050 on your credit side. Okay. So that's how to do that. Let me cancel this. Please, you can watch it again. And if you don't still understand, you can DM me, please. Because I know the explanation is, you may not get it depending on this thing. You may not get it on time. Okay. But don't worry, you get it. So moving on, moving on. So now if you do 2050 times 2, 4100. So the 4100 will be added to the balance. Why? Because it is on the credit side. You just saw what I did in that example. It was on the credit side. So this one too is on the credit side. 197 because payable is a liability. So payable will have a what? A credit balance. Okay. So let's go to the third one. Third one say a check of 2550 from a customer has been dishonored. Everybody know this one now. Dishonored check. The correct double entry has been posted to the individual account. No, the correct double entry has been posted, but the individual account has not been updated. So if you look at this one directly, you know that it affects what your receivable, your receivables. I mean, let me first say it is either control account or not control account. So it affects the receivables. That's the first thing you want to know. So which side of your sales affects you, the ledger, or is it the control account? And I said, they said, listen now, they said the correct document has been posted in the individual ledger. So it means that if it has been posted in the correct individual ledgers, the problem will not be in the receivables control account. It will be in the ledger account. So now that I've already done this one, it will be easier for me. I'll just do copy and paste to do the receivables control account. Let me just copy few lines. So let me just copy it here. Oh yeah. Oh, that's too much. Oh, it's okay. This face is okay. Oh yeah. Okay. Still okay like this. So we change this to receivable. Sorry, I want to check the time. Also, my battery. So this one will be cancelled. Ojo cancelled. Okay. So this one will be changed towards receivable ledger control. Okay. This one will be changed. Then after that, minus remove all this one too. All these jargons that are written. Okay. So in this place, you have a balance both forward, balance both forward. Your first balance is what? Let's quickly go back to the question. That's what for receivables 156, 134, 134. Okay. Let us quickly balance of the this into balance both forward. That's what 172, 120. Okay, so now we can go to what we want to do, which is this one. The check that has been dishonored. Now, a dishonored check will need increase your debt or it will decrease your debt. I already told you that dishonored check will increase your debt. So you just write dishonored or check dishonored, which is how much? 2555. So the next one is what? Next one says a particular payment to suppliers. Anytime you suppliers, you going straight to payables. Amounting to 6 that have been correctly treated in the control accounts or no entry has been entered in the individual ledger. So it means that this one is not related to control account, it's related to what? Individual ledger. So very good. So they said they take that payment. Abi, so payments will it increase your debt or it will decrease your debt to decrease your debt so that either it's petty cash payments. That's how much. That's 630, right? So this will be 630. Okay. Then the next one is let's quickly finish this because of the battery. So next one is payment of 322 from a customer. Anytime you hear customer, that's credit receivable, just come back. Payment of 322 from customer has been incorrectly entered in the account receivable. That means this one is related to what? Account receivable. As what? So, transposition. Translation error. So how do you correct that error? You open the bracket, you say 322 minus 233. What would the difference give us? You get the difference will give us 89. Then I said payment of 233 abi was entered into the ledger as three sorry payment of 322 was entered as 233. It means that this 233 means that it's the undercast figure which means that debt were overcasted. So the market correct anything. Emma Emma the difference which is this 322 minus 233 that's wait that's 89. 89. So the 89 will be minus. The reason why the 89 will be minus is because it's going to reduce our debt. This is the original figure. It's all over cast 8,000. It's just like I'm owing you 500. It's just like I'm owing you 500. I now paid 400, but inside your book, you now owe 300 for me. If you owe 300 for me, it means I'm still owing you 200. So what will you do? So if it is showing your book that I'm owing you 200, what will you do? You see minus the 100 naira tó kù tó yẹ kó fi jẹ́ 40 tó lọ ṣe mistake, which will now give you back your 100. So that's why I'm going to minus this 89. Okay. So the next one is the purchases day book. When you hear purchases day book, come back to payable again. You see like that, it just be coming going. So so in your exam, just prepare the two like this. Then you'll be entering it anytime, anytime, anytime. It will be more faster and more straight. But if you say you want to finish payable first, that comes to payable. Well, everybody have their choice. So the payable purchase accounts, payables day book, total for March has been undercasted. So there's an undercasting of payable control, payable trade, payable day book total for how much? For 20,000 naira. So that's an undercast. Undercast means that it will increase the debt because ẹ ti over reduce kìíní yẹn. Èèyàn tó ń jẹ yín ní èèyàn tó ń jẹ yín ní 40,000 ẹ wá lọ ṣe mistake kọ 20,000 pé ó ń jẹ yín. Ṣé kò tún jẹ yín kò ní jẹ yín ní other 20,000 ó yìn jẹ yín ní other 20,000 so it's still debt. So to be here overcast undercasting error of what of 20,000 or yeah 20,000. Okay. The last one is if not that's details of 4,500 to an accounting firm TQ and associate has been posted correctly into the account but not recorded in the control account. That one is to show you that was credit sales that it's coming here. That's receivable. Enter the credit sales for receivable here. So as well credit sales. How much? Credit sales is 4.5 straight. Next one is contract settlement. Set of how is it? Simple. So one will be here, the other one will be a set off. One will be here. I don't even need to read that. Even know anytime you hear set off like that, it's straight to the point. Okay. So just write set off. I don't even need to read that. Although it's good to read it because there may be other things they are saying on it, but I don't have much time again. My system will soon go off. So you just come here and write the second set off, set off as to the same figure. Okay. Then the last one, the next one says this catalog only one thing has not been entered in the control account. This can't allow relates to your customer. That's also trade receivable. This can't allow here. How much? 120,000. So 120,000, right? The next one is okay. That's the last one. That's the last one. Wow. So we have prepared our trade receivable and trade receivable control accounts. We have done our. So now this is where the moment of truth, where we know whether what we are doing is correct or wrong. Okay. So if you add all this together, let's do our auto sum. So auto sum will give us 158,860. Okay. So this one will be higher than this side. So let me put the in here. I don't know why this thing is closing early because I pressed. So this one, if we add it together, give us this the same thing here to 176,620. So your balance will be a balance carried down. Hey, I have to finish this class very soon. So our balance carried down is what? So let's quickly do the formula. Goes to sum. Mm, sorry, let me check the how many percent difference. 90. Sum this, this, okay, this. Let me just write it out. That's the F20 plus F22 minus F20. No, F20 plus F21 minus F23. Oh, wait. This is 156, 460. There is something missing. There's something missing. Oh, this cash received. Cash received. Wait, they said cash received the one that has been debited to individual customer in the account received. Oh, I'm so sorry. I'm so sorry about that. I'm supposed to have added that inside. Hmm. Supposed to have added that inside what I was doing. So cash received. Sorry. So they said cash received. Know that cash received. Cash received. It's receive. Right? It's supposed to reduce your cash is supposed to reduce your debt. So that means you are supposed to have credited it. You're supposed to have credited it in the receivables ledger, but then I said they debited it. That was a mistake. So you want to correct the mistake now. So cash received. You want to correct the mistake. So that how will you correct that mistake? It's the same way as you corrected this one. That's 1,070 times two. Two. So 1,700. When you calculate that, that will give you 2,140,000. When you calculate everything, let's recalculate. Yes, that will give us 15460. So it's correct to this one. So that's one way you know whether what you are doing is correct or is not correct. So let's just quickly apply this formula to this also. So what this one give us is 201 um 201 130. Okay. So if you check this one, the balance should be here. Balance carried down. So I want to check whether this is still connected. 18%. Okay. So if you add all this together, this will give us sorry, this one gives the highest. This is where the balance card answer will be. Sorry, it's because I'm rushing now. So this will give us what? We add it together, everything will give us 238. This one will be 238, 820, 320. Right? Then you use this, if we use this formula to V, should give us the same thing. So this is 201, 130, this is 201, 130. So that's the end of this question. We got the same thing. Please, I'm sorry for that number one. That was a mistake. I misinterpreted it. What I was thinking was that the cash was received, so it's not a credit transaction. But now, when I read it again, and I saw that the cash received, someone owe you money. Now you are the person has paid. Supposed to reduce the debt now. So it means that it's supposed to be credited. If you know your receivable has a debit balance, so anything that will reduce your receivable will be what's credited. So instead of the cash received supposed to be credited, they said they debited it. So you have to put it back in your receivables account. Okay. So I'm going to send this to you later, but let me first end this recording so that it's not, because this meeting will soon end. Please, I'll send the solution to the group. Watch it again and again and trying to understand everything in the class. Okay. Thank you very much. I'll stop recording now. If you have any question, you can let me know. Enter my DM. Okay. Thank you very much. Bye.